While everyone's obsessing over Nvidia and Palantir, there's a $300 billion company that just did something insane. They sold out their entire production capacity through 2026. Not most of it, all of it, every single chip. And here's the kicker. Wall Street barely noticed. This company doesn't make the flashy AI models. They don't build the GPUs everyone talks about. But here's the truth. Without this company, none of the AI revolution happens. Not Nvidia's chips, not ChatGPT, not any of it. And right now, they're trading at just 8 times forward earnings while growing revenues 57% year over year. If you missed the early gains in Nvidia and Palantir, pay attention, because what I am about to show you could be the most undervalued AI play on the market right now. And the supply shortage they're experiencing, it's about to get worse, much worse. Watch all the way to the end to get the full story. Let's talk about Micron Technology, ticker symbol MU. Micron just reported Q1 fiscal 2026 revenue of $13.6 billion, up 57% year over year, with earnings per share of $4.60, up 170% from the previous year. But that's not even the shocking part. The shocking part is what they said about Q2. Micron's guidance for next quarter projects $18.7 billion in revenue and over $8 in earnings per share, representing a 37% revenue increase and 76% earnings increase quarter over quarter. Let me repeat that. They're expecting to nearly double their earnings in a single quarter. When was the last time you saw a $300 billion company do that? Now here's where it gets interesting. Most people don't even know what Micron does. They make memory chips, DRAM and NAND flash memory, the kind that goes into everything from your phone to the most advanced AI data centers on the planet. And right now, there's a massive problem in the memory market. Actually, problem isn't the right word, it's more like a crisis, because Micron's CEO confirmed that the company's entire HBM production capacity for 2026 is already sold out due to unprecedented AI demand. Think about that. It's December 2024, and they've already sold every chip they can make through all of 2026. That's not normal. That's a structural shortage. So what's HBM and why should you care? HBM stands for high bandwidth memory. It's the advanced memory that goes directly into AI chips like Nvidia's H200 and Blackwell GPUs. Without HBM, those chips are worthless. You could have the most powerful GPU in the world, but if it can't access memory fast enough, it just sits there doing nothing. Here's the problem. SK Hynix, the largest supplier of HBM to Nvidia, has told investors that its advanced packaging lines are at capacity through 2026, and Micron is in a similar position. This isn't some temporary bottleneck. Multiple semiconductor CEOs, including those from TSMC, SK Hynix, Micron, Intel, Nvidia, and Samsung, all delivered the same message. Demand for high bandwidth memory is rising much faster than capacity can be built. Now here's where the money is. When you have unlimited demand and constrained supply, what happens? Prices go up, way up. Some reports indicate memory demand is expected to grow approximately 35% in 2026, while supply grows only 23%, creating massive price pressure. And guess who benefits from higher prices with sold-out inventory? Micron. But it gets better. While everyone focuses on HBM, there's a secondary effect happening that almost nobody's talking about. Every wafer allocated to HBM production is a wafer denied to consumer products like smartphone memory or laptop SSDs, creating shortages across the entire memory market. This means Micron isn't just seeing pricing power in HBM, they're seeing it everywhere. Consumer DRAM prices are spiking, enterprise SSDs are getting more expensive. The entire memory market is tight. Let's break down what's actually happening inside Micron's business, because this is where the opportunity gets ridiculous. Micron has 4 main business units, but one of them is absolutely printing money right now. Their cloud memory business unit brought in $5.3 billion in Q1, up 16% from last quarter and 100% from last year. Operating margins in this segment hit 55%. Read that again. 55% operating margins. They're making 55 cents of profit on every dollar of revenue from cloud memory. That's not a business, that's a money printer. And here's the beautiful part. Micron has a 21% share of the global DRAM market. That makes them one of only 3 companies dominating AI memory. The other 2 are SK Hynix and Samsung, both based in South Korea. But Micron has a massive advantage. They're the only American player. With Trump administration trade policies and potential tariffs, being the only US-based major memory manufacturer gives Micron significant strategic value. Plus, Micron doesn't just design chips, they manufacture them. That's called being an integrated device manufacturer, or IDM. This matters because Micron can optimize everything: the chip architecture, the manufacturing process, the advanced packaging. They control the entire stack, and they're using that control to dominate HBM. Micron announced their HBM4 is on track to ramp with high yields in Q2 2026, featuring industry-leading speeds over 11 GBps. They're not just keeping pace with competitors, they're leading. Here's where we need to talk valuation, because this is where Micron gets absolutely ridiculous. The stock trades at a forward PE ratio of around 8. Let me put that in context. ARM Holdings trades at over 100 times earnings. AMD trades at 25 times earnings. Qualcomm trades at 15 times earnings. Micron, growing revenue at 57% year over year, trades at 8 times earnings. That's not a valuation. That's a joke. Wall Street's excuse is always the same. Memory is cyclical. When the cycle turns, Micron crashes. And historically, that's been true. Memory markets have boom and bust cycles where prices spike, then crater as new supply comes online. But here's what's different this time. This isn't a normal cycle. Micron's CEO described the current HBM shortage as structural, not cyclical, with supply constraints expected to persist beyond 2026. Why? Because AI isn't a trend. It's a fundamental shift in computing. Every major tech company, Microsoft, Google, Meta, Amazon, is building massive AI data centers, and every single one of them needs enormous amounts of memory. OpenAI and Microsoft finalized plans for Project Stargate, with Samsung and SK Hynix committing up to 900,000 DRAM wafer starts per month to support the build-out. That's an absolutely massive commitment, and it's just one project. The capital expenditure to build new memory fabs is also insane. Micron increased its planned fiscal 2026 capital expenditure to approximately $20 billion, primarily focused on expanding HBM capacity. But here's the catch. Even with that investment, new fabs won't be online until 2027 or 2028. That means the supply shortage continues for years, and during that entire time, Micron will be operating with sold-out inventory and pricing power they've never had before. Now let's talk about what could go wrong, because no investment is risk-free. First, Micron is heavily exposed to capital expenditure risk. Owning your own fabs is great when demand is high, but if demand crashes and you're stuck with $20 billion worth of idle manufacturing capacity, that's catastrophic for margins. We saw this play out with Intel. They owned their fabs. Manufacturing problems hit. Yields dropped. Competitors who outsourced manufacturing, like AMD, ate their lunch. Micron faces the same structural risk. Second, there's execution risk. Micron's Q2 fiscal 2025 guidance came in below Wall Street expectations, causing the stock to drop over 13% after the report. The company has a history of conservative guidance that disappoints short-term traders. Third, there's China risk. Chinese memory manufacturers like CXMT are trying to build domestic HBM capacity. They're years behind, but with massive government subsidies, they could eventually become competitors. And if US-China tensions escalate, Micron could lose access to Chinese markets entirely, Fourth, the valuation discount exists for a reason. Memory is cyclical. When AI capex eventually slows, and it will slow, memory prices will come down. The question is, how far down and how fast? If you're buying Micron, you're betting that the AI memory shortage lasts longer than the market expects, and that when it does normalize, prices stay elevated due to structural demand rather than crashing back to commodity levels. So how do you actually play this? Micron stock delivered over 300% returns from its April 2024 lows through December 2024, but it's still trading at a massive discount to other semiconductor names. The question is whether that discount persists or compresses. Here's my view. Micron isn't a momentum trade anymore. The easy money from the initial AI memory rush has been made. This is now a value play with a growth catalyst. The bull case is straightforward. If Micron executes on HBM4, maintains pricing power through 2026, and cloud memory margins stay elevated, this stock could easily be worth $350, $400 in 18 to 24 months. That's 25 to 40% upside from current levels. The bear case is equally clear. If AI capex slows faster than expected, if Chinese competitors flood the market with cheap alternatives, or if memory prices crater due to sudden oversupply, Micron could trade flat or down for years. My personal strategy? I'm building a position slowly. I'm not chasing the chart. I'm looking for pullbacks to add. The recent earnings pop took the stock from around $265 to over $275. If we get weakness back toward $250, $260, I'm adding aggressively. I'm also watching the quarterly results closely. Micron's Q2 guidance was massive. If they deliver and raise again for Q3, that confirms the structural shortage thesis. If they guide down or margins compress, that's a warning sign to reduce position size. Here's what most people miss about Micron. This isn't just a memory company. It's an AI infrastructure play that happens to be massively undervalued. Think about it like this. Nvidia gets all the attention. They trade at 30 plus times earnings. Everyone wants to own the picks and shovels of AI. But Nvidia's chips are useless without memory, and memory is sold out. Micron is the other critical piece of AI infrastructure that nobody's talking about. They're not as sexy as Nvidia, they don't have the brand recognition, but they're equally essential, and they're trading at a fraction of the valuation. The market will eventually figure this out. When institutional investors start modeling out the memory shortage and realize it's structural, not cyclical, capital will flow into Micron. And when that happens, this 8x PE multiple is going to look absolutely ridiculous in hindsight. Wall Street analysts have an average price target of around 282s, with many calling Micron a strong buy. But even that might be conservative if the memory supercycle extends through 2026 and beyond. Look, I can't tell you what to do with your money, but here's what I know. We're in the middle of the biggest infrastructure build-out in tech history. AI data centers are getting built at breakneck speed, and every single one of them needs memory. Lots of it. Micron is one of only 3 companies that can supply that memory at scale. They're sold out through 2026. They're raising prices, their margins are expanding, and they're trading at 8 times earnings. If you missed Nvidia's run from $200 to $1,000, if you missed Palantir's 300% gain this year, Micron might be your second chance. Not because it's going to move that fast, it won't, but because the risk reward is extremely compelling right now. The downside is capped by the valuation and cash generation. The upside is driven by structural supply shortages in the most important technology build-out of our generation. That's a bet I'm willing to take. So here's what I want to know. Are you buying Micron at these levels? Are you waiting for a pullback? Or are you staying away entirely? Drop your thoughts in the comments below. I read every single one, and I genuinely want to hear your perspective on this. And if you found this breakdown valuable, do me a favor. Smash that like button and subscribe to the channel, because I'm going deep on AI infrastructure plays all year long. This is just the beginning. If you like this video, watch the next one over the screen now, because in markets like these, the people who do the research and think independently, those are the ones who make money, and I'll see you in the next one.